Welcome back, everyone. We have heard about the trends that defined commodities and emerging markets last year, but how can investors take advantage of those opportunities in the markets this year? Well, our producer, Jen Amos, asked the Weiss research editors that very question, and she joins us with their answers. Hi there, Jen.
Hey, Jamie.
Jen, first off, are there any commodities that seem to be particularly popular among the editors?
Actually, quite a few of them are bullish on oil this year. You know Sean Broderick watches the energy markets very closely, and he thinks oil prices are due for a significant spike. The way he's telling investors to play that trend is through oil services companies, because those stocks are really leveraged to the price of crude. His pick in that arena is the SPDR S&P Oil and Gas Equipment and Services ETF, ticker symbol XES. Sean's target price on that fund is $62, which would be nearly a 70% increase from where it is now. Not a bad return if you ask me.
Jen, what are the other plays in the energy sector that the editors recommended?
Mike Larson likes a stock that is not only levered to the rising price of crude, but also takes advantage of the growing influence of the emerging markets. Repsol is a Spanish oil and gas company that also operates in Argentina and has an interest in the huge new finds off the coast of Brazil. The stock recently broke above its 50-day moving average, so Mike thinks it still has a lot of upside potential. Tony Sagami is also picking a stock that is tied into the bullish trends in both energy and the emerging markets, but it's not an oil play. China Ming Yang Wind Power trades on the New York Stock Exchange under the ticker symbol MY. China has made alternative energy, especially wind power, one of its top priorities, and this company is the largest wind turbine manufacturer in the country. So it's likely to give you solid returns in the future.
Jen, to the pans now, any commodities the editors would recommend just staying away from this year?
Sean thinks one commodity investors should be wary of, at least in the first half of this year, is wheat. It had a great run in the second half of 2010, due mainly to supply concerns, and right now it's well above $8 a bushel. But Sean thinks that this looks like a top in the wheat market, and it could pull back all the way to around $6.30 a bushel. He predicts wheat could ultimately go higher, but he'd wait for the pullback before jumping in.
Okay, let's turn away from commodities a bit and focus on some pure emerging market plays. Do the editors have any recommendations there?
Our ETF expert, Ron Rowland, is seeing the same trend away from the developed economies toward the emerging markets that many of our other experts have highlighted. Plus, he's also seeing another shift from emerging market large cap stocks to small cap stocks, which are more closely tied to the internal growth of the emerging economies. Ron thinks that this trend is in the early stages of a multi-year cycle, and that many of these stocks are just now being discovered. So he's recommending the SPDR S&P Emerging Markets Small Cap Fund, ticker symbol EWX.
And finally here, I guess I should ask, are there any emerging markets on the other side of the spectrum, those that our viewers would be wise to avoid?
There is one Asian emerging market that Tony recommends staying away from: Indonesia. The Market Vectors Indonesia Index ETF gained 46% last year, but Tony thinks it's gotten ahead of itself. The Indonesian government seems to feel the same way, raising interest rates by a full percentage point in less than a year to try to alleviate a growing inflation problem. This year, the Indonesian stock market is already down 6%, after suffering its worst one-day drop in 2 years last week. And it's a good bet there will be more losses to come.
Okay, thank you, Jen.
Thank you, Jamie.
We're taking a quick break and then coming back with all of our earlier guests, Sean Broderick, Tony Sagami, and Rudy Martin. They'll discuss the factors that will determine the direction of the commodities and emerging markets in 2011 and how you can stay one step ahead of them when Money and Markets returns.